Hello, everyone. Thanks for joining and welcome back to Wall Street Silver. Our guest today is the one and only commodities investing legend and the founder of Rule Investment Media. Rick, how are you doing?
Life is great, Ivan. Thank you for asking. Great holiday season. Looking forward to a wonderful 2025. I hope the season was the best to you and yours, and I look forward to experiencing 2025 with you and your listeners.
Oh, you know what? I really appreciate you coming down to Wall Street Silver, and I wanted to get you on to talk about the precious metals market. There's been so much excitement about it in the past few months. You know, people are keeping a really close eye on the silver, gold prices, the fundamentals. But I wanted to, just to pick your brain and see where do you think we're going for silver and gold in 2025?
Uh, in the very near term, I can't tell you. I just don't know. I've tried to make short-term price forecasts for years, and like everybody else, my track record is lousy.
Oh, that's good. Well,
Sadly, looking longer term, I say sadly because the set of circumstances that leads to higher gold prices is inevitably a challenging circumstance. Uh, I think, unfortunately, that the outlook for gold is good, which is to say that the outlook for particularly debt-denominated fiat instruments is bad. But gold has, for 2,000 years, fulfilled a role in protecting people's wealth, protecting their portfolios in times like the times that I think we're going to experience in the next 10 years.
people have been talking about the repo crisis in America. They've been talking about how bad the debt is and how, how can they reduce interest rates when inflation keeps gradually going up. Where do you see the US economy going and how will that affect the global economy?
I think the United States is experiencing sort of a dichotomous economy, which is to say that artificially low interest rates are making it a very good economy for people like me,
Right.
people with access to credit and people with the education to know how to use it. For me, this is the best of times. If the Fed got out of the way, interest rates would probably go up 250 basis points. So ordinary people would make more money in their deposits, and I would spend more money to borrow money. For a whole bunch of the country, this market isn't working. It isn't working well at all. They talk about all the jobs being created, and they forget to note that somebody needs to work three jobs to make a living.
That's right.
And the political class is really stuck between a rock and a hard spot, Ivan. They understand, at least they understand at the Fed, that they have a much bigger problem with inflation that they're talking about. They also know if they raise interest rates that they slow the economy down, which makes them unpopular, which
Right.
they don't want to do. So let's look for fun at the arithmetic around it, if I may. I realize that math is much more boring than narrative, but it's also much more instructive than narrative. And I'm just talking about the US. I realize that there are other countries in the world, including the one that you're in. Congratulations, by the way, for allowing your prime minister to explore other employment opportunities.
We're excited.
But let me get back to the arithmetic. At the federal level in the United States, and we've said this before, we owe $36 trillion.
There's about $15 trillion worth of physical gold in the world sitting there costing money rather than being used. Is just absolutely insane. Monetary Metals is bringing gold back into the financial world, putting gold to productive use right now. The problem with gold, of course, in physical form is that it's heavy, it's cumbersome, it's not particularly easy to ship, and it costs money to store in a protected manner. This platform Monetary Metals created is a proven concept and allows gold to be put to productive use. So instead of sitting there costing you money, it's actually in use earning you money.
Learn how you can earn 2 to 5% in our leasing program and how accredited investors can earn up to 12% on silver paid in silver. This advertisement is not investment or financial advice. Minimum investment applies.
To put that into context, is 20% more than our GDP.
Wow.
It's 20% more than our economy generates on an annual basis before we spend money for stuff like food. So that's a problem. But a much bigger problem is the fact that rather than reducing the debt, we increase it by $2.5 trillion a year. In other words, we're not digging our way up, we're digging our way deeper.
Mhm.
And the bigger problem than that, Ivan, is that our off-balance sheet liabilities, the net present value of our unfunded entitlement promises, Medicare, Medicaid, Social Security, federal government pensions, military pensions, exceeds, according to the Congressional Budget Office, $100 trillion.
Wow.
Every year, we add between $2.5 and $3 trillion a year in unfunded liabilities, net present value, and $2.5 trillion in on-balance sheet liabilities. So every year, the aggregate debt load gets bigger by $5.5 trillion. That $5.5 trillion exceeds gross revenues at the federal level
Hmm.
every year. I don't see a way out of this. I mean, we could have an honest default. We could say to old codgers like me, too bad, so sad. Yes, you paid in your whole life. Yes, we promised you, but no, you're not getting a check.
Right.
I don't see that happening. So the only way out that I see, Ivan, and I'd welcome any comments to the contrary, is that while they, in a politically expedient way, honor the nominal value of the debt, that they inflate away the net present value of the debt. And there's history in this. In the decade of the 1970s, we had the same circumstance. It was politically unpalatable to raise taxes. The maximum rate then was 75%. And it was politically unpalatable to cut expenses. We were fighting the war in Vietnam, which of course we lost, and the war on poverty, which we lost too. Because they couldn't cut and because they couldn't raise, what they did was they allowed the purchasing power of the dollar to deteriorate. The Office of Management and Budget says that in the period between 1970 and 1980, that the US dollar lost in excess of 75% of its purchasing power.
Wow.
And not coincidentally, the gold price went from an admittedly price-controlled $35 to a high of $850. So let's throw out the move from 35 to 100. I believe that the consequence of the US dollar's purchasing power deteriorating by 75% over the course of that decade, that gold enjoyed, if that's the right phrase, an eightfold increase in price. And while the increase in price that we see for the next 10 years may not be as dramatic, I would suspect that it will be dramatic because I don't see any way out
Right.
of $136 trillion in debt without inflation. People say, where's the evidence of inflation? Well, I'll give you two pieces. The Fed cuts the interest rate, and the interest rate payable in the long-term bond rises,
Right.
which is to say the market is demanding an inflation premium, irrespective of what the debt does. But the second is common sense. I would ask your listeners who are listening today, the federal government tells you that inflation measured by the CPI is 2.5, 2.6 a year. Ask yourself, have your gasoline prices increased by 2.6%?
Way higher.
How about your health insurance? How about your mortgage? Mortgage rates have doubled. How
Yeah.
about your rent? How about grocery prices? This 2.6 number is ridiculous. And by the way, this 2.6 number doesn't include tax.
Yeah, it's crazy.
It's really, truly crazy. If I'm right, Ivan, if I'm right about the fact that the only political response to our debt crisis and our spending prices is to allow the purchasing power of the US dollar and, of course, by proxy, the Canadian dollar to deteriorate, the time-honored method to deal with that is gold. And maybe more to the point of your broadcast, in my lifetime, when the precious metals narrative attracts the generalist investor, which I think it will be, ultimately, the biggest and fastest beneficiary is silver. So ironically, while the outlook for the American citizenry and the Canadian citizenry, respectively, is less good, the outlook for gold and silver investors and speculators is unfortunately very good.
Hmm. What about you absolutely nailed it, Rick, but what about I guess people have been talking online about the distortion or why is there such a big divergence from the mining sector in gold and silver to the actual physical gold prices or the silver prices? What are we seeing there?
I think the gold mining industry disappointed investors for 40 years.
Yeah.
And I think there's a hangover in place. You know, this next stat will disgust you. In the period 2000 to 2011, the gold price moved from 256 some number like that, to 1900. And the free cash flow per share of the XAU, the gold stock index, fell.
That's insane.
A sevenfold increase in the selling price of their product and their free cash flow per share fell. Now, that means that a fair number of natural resource investors even abandon the sector, and the generalist investors are as fond of gold stocks as they would be of AIDS. I think that you are just now starting to see, for the more efficient producers, margins from the increase in gold price fall through to the bottom line. Remember that the early part of this increase in gold prices also saw a rapid increase in the input cost to produce gold.
Right.
Steel, energy, cement, labor. It hasn't been really until the last year that the escalation of the gold price has outpaced the increase in input costs. But in some companies, I'm thinking about Lundin Gold as an example, Alamos Gold, Agnico Eagle, they haven't just beat quarterly free cash flow estimates; they've obliterated them.
Wow.
And if that success continues, I think that you'll see the delta between the gold price and the implied price of gold equities based on the gold price begin to narrow.
Hello, my fellow silver and gold stacker. I just wanted to say thank you so much for watching the channel. Subscribe, please like the video, and also hit the notification bell. Keep stacking. And what do you see, I guess, Rick, as the first thing you're looking at? Because there's a lot of new silver and gold investors, silver and gold stackers in our community. What advice would you give them when you are looking at this silver mining or the gold mining sector? Do you look at their team, past history? What's the, I guess, the top three things you look at?
First of all, forget the narrative and forget the story. That's only good for making people even dumber than you buy after you bought, which is not something to count on.
Right.
I look, first of all, in the small stocks for people. I look for people who have been serially successful in the past and serially successful at a task at hand that resembles the current task. If they're looking for silver, pardon me, in Peru or Ecuador or Chile, have they in the past discovered precious metals in epithermal terrains? And do they speak Spanish? Common sense stuff.
Right.
It's all about the team. Secondly, I would look for scale. There's too much seduction, particularly for entrepreneurs, around the story that a company's going to start with a small deposit. You use the cash flow to grow without dilution. Recreate Newmont from bootstraps.
Right.
Very seductive story, never works. You take big risks in mining, so you may as well play for big rewards. Big mines give you big rewards. Both small and big mines have big risks. So scale is really important. If you have the ability to have a look, first of all, at a resource statement, then at a preliminary economic assessment, then at a pre-feasibility study, then at a feasibility study, pay attention to a couple things. Do you believe that this deposit has the chance to be in the best cost quartile in its commodity,
Right.
and in the highest return on capital employed in its commodity? If that's so, the company will either be a success in the stock market, or it will be taken over by somebody who is already a success in the stock market.
Absolutely.
If it doesn't, you are constraining yourself to hanging out in the ghetto with the great unwashed. There's no particular point why you would want to do that. If you take the risks that are inherent in the mining sector, you need to take some easy steps to prepare yourself to prosper.
Right. Well, you absolutely nailed that, Rick. I think it's so important right now for you to give our listeners that advice, so just so they know the direction. And before you leave, I really wanted you to talk about Rule Symposium. It's this Saturday, Boca Raton. Yeah, please talk about that.
Not this. This one's an online, not the Boca Raton Symposium. We're doing
Okay.
a deep dive into gold, physical ownership, the gold stocks, the whole range of things around gold. For those of your listeners who don't know about our boot camps, every 90 days we take one subject in natural resource investing and we do a very deep dive, an 8-hour long dive. This is not a product for somebody who buys the newspaper to read the funnies or the crosswords. Okay. uh, it, we will give you deep and dense but valuable information over 8 hours. We'll give you so much information that you will need to replay the recordings a couple of times.
Right.
You aren't signing up for knowing a lot, don't come. If you are a gold investor or a silver investor, absolutely do come. We will teach you really why you own gold. Understanding the reasons behind ownership gives you the courage to stomach market fluctuations. We'll talk about investing in gold, which is to say physical gold, using it as insurance. We'll talk about investing in gold equities, the highest quality gold stocks, and we'll talk about speculation in the juniors. There's three different kinds of investors in gold. There's the saver, who owns physical gold, the investor, who buys high quality gold companies, and there's the speculator. And we'll talk to all three of them. Like every investment education product I've ever offered in my life, over 28 years, this comes with a full money back guarantee. If you sign up and the link that you've posted below, there will be a charge of $99 to attend. If you delay and come to the door, it'll cost you more. The important thing to remember is that there's an absolute money back guarantee. If you think for any reason that the information that we give you in the boot camp wasn't worth your tuition, email me. I'll give you the money back.
Wow.
No financial risk to you at all. Now, I've been making these money back guarantees for 28 years now, Ivan.
Mm-hmm.
And mercifully, the content has been good enough that I've had to refund less than 1/10 of 1%.
Oh, yeah, that's great.
Charge. But I can't think of very many investments that you can make that have an absolute gold-plated money-back guarantee. This is, with regards to financial exposure, a no-risk investment.
So this is Boca Raton, July 7th to 11th, correct?
Oh, no, we're talking about something different. We're talking
Okay.
about something that takes place this Saturday.
Okay, so this is this Saturday. I'm going to put the link in the description below.
This Saturday. The
Right.
Boca Raton Conference is a very different value proposition.
Okay.
I've been told by people, and I'm predisposed to believe it, that this is the finest natural resource investment conference in the world in Boca Raton. You can attend that live, which I would prefer, or you can attend it live stream from the comfort and convenience of your own home. Once again, it has an absolute gold-plated money-back guarantee. How can I do this? Well, it's a hell of a product. We've put it on for 28 years. It's gotten a little bit better every year. And if you do it for 28 years, it gets better every year. It gets pretty good.
Nice.
We have great big picture speakers, the macroeconomists, the Jim Rickards, the Bill Bonners, the Daniela DiMartino Booths, people who tell you about the world the way it is, not the way the big thinkers wish it were. We have great analysts, people who have made money in natural resource businesses for 40 years, not people who failed at auto stocks and then failed at tech stocks and have parachuted down into natural resources, but people who stood the test of time as natural resource investors. Importantly, every exhibitor at our conference is vetted. No public company can exhibit on our exhibit floor if their stock aren't owned by the sponsors of the conference.
Okay.
Doesn't guarantee, Ivan, that every stock I buy goes up. It does guarantee that I know them well enough that I've invested my own time and treasure in them.
Right.
Which is important. Another great feature is that we have a panel called the Living Legends. People who have built multi-billion-dollar natural resource companies from scratch. They tell you about the lessons that they learned. They tell you about other people they invest in. They tell you how you can become a better investor. This is the most popular feature of the show every year. And this year we're expanding it. We're going to have an Investing Legends panel too. People who over 3 decades have made hundreds of millions of dollars or billions of dollars investing in natural resource stocks,
Wow.
teaching you their lessons, teaching you their tricks. Once again, absolute gold-plated money-back guarantee, whether you attend live at Boca Raton, Florida, which I would prefer, or from the comfort and convenience of your own home via live stream. In each case, you will have access for a year to the conference recordings so that you can refamiliarize yourself with all of the lessons that we teach. Once again, like the boot camp, the information that you're going to get is so dense, there's going to be so much of it, that you aren't going to be able to absorb all of it during the time that the conference is physically held. The
Right.
consequence of that is that we will make available conference recordings so that you can refresh your memory over the course of a year and get your full money's worth out of the conference.
Well, this is awesome. Like, I really appreciate this, Rick. I am going to put the link in the description below for everyone. So everyone watching this right now, please go sign up to the Boca Raton. But that's July 7th to 11th.
Yep. There's another one this Saturday. What's that, January 11?
Yeah, January 11th. I'll put that in the link in the description below. So everyone watching, you'll have two links, one for this Saturday, and then of course for July 7th to 11th in Boca Raton. But Rick, it's such a huge pleasure having you come down to Wall Street Silver. Every time you come down, it's a breath of fresh air. So I just wanted to thank you so much for coming to talk to Wall Street Silver and all of us.
Well, I enjoy the opportunity, and I'd also like to offer the Wall Street Silver viewers the ability to reach out to me for free at
Oh,
Rural
yes.
Investment Media. Go there, list your natural resource stocks, your silver stocks, your mature stocks, your penny dreadfuls. It doesn't matter. Any resource stock listed at ruleinvestmentmedia.com, and I will rank them for free, no obligation, 1 being best, 10 being worst. I'll
Wow.
comment on individual issues if I think my comments might have value. Once again, ruleinvestmentmedia.com, list your natural resource stocks. Ivan, thank you for the opportunity to talk to your audience. I always enjoy these discussions.
Yeah, no, a huge, huge pleasure. And everyone watching, all the links will be in the description below. Yeah, Rick, thank you so much. I'll talk to you soon.
Pleasure, sir.